Hello, good afternoon, welcome back to Lunch at the Market. Hope you did some buying yesterday, at least some selling of some options premium on the massive panic that we saw. The Dow closed, well, basically all the indexes closed on the lows for yesterday, and the VIX momentarily got to where it needed to be. We had a conversation with Scott Nations of Nation Shares today on Twitter, and basically the summer is a time when there's just not enough people to get the VIX elevated for more than just a brief second. In fact, I don't even think we're at 18 any longer today. Ideally, we would stay at 18 or above, being that we're long 16-20 in the money call spreads, although they become less in the money as the markets trend back upwards. There's just, despite June being a difficult month and a month where a lot of terrible, horrible, no good, very bad things seem to happen to the indexes in the month, Scott said it's going to be tough to see the VIX really stay at a sustained high level for an extended period of time, any longer than just briefly touching a level and then trading back down. Speaking of levels, we have two important ETFs that we did trade today, successfully so, that we're going to give you the levels on. One is GLD, the other one is SPY. GLD, as you know, of course, is the tracking index for gold. There are some important levels for GLD. So, for those of you who didn't catch us on Twitter this morning when we sent out the comments about the levels, remember you don't have to sign up for Twitter. You can go right to magnumopusfinancial.com, and right there on the home page you'll see our Twitter feed kind of scroll by with all of our recent comments. You can just kind of sit there and watch the new comments appear if you don't want to sign up for Twitter. That's a nice easy way to see things as they happen. Okay. So what exactly are those levels? Well, the first level is the 148 level. That is the level where on May the 10th, GLD traded up to and then subsequently failed down to the 50-day moving average of around 142. In fact, GLD got down to around 143.42 intraday, which is just above that moving average. After testing that 148 level. So it tests the 148 level, then it trades back down to the 50-day moving average. Intraday got to 143.42 and then closed at 144.72. So that number, the 144.72, we'll round up a little bit. We'll take 145 as our level. That is where support is on GLD, is around that 145 level. You can't really get 144 and change because the GLD trades every strike on the options. All right, so there's no like in the 50-cent range. Okay, so 145 is our level in the GLD. So what do we do today when GLD got down to that 148, right, which is that key level of support? Almost to the penny, it got down to 148 and bounced. We sold the June 145, 143 put spreads for about 27 cents. It's not a ton of money, but again, the calendar is firmly on our side with only 11 trading days left after today, and it's below that key level of 148 support, which GLD held extremely nicely today. Obviously, we don't know what the future holds, but for right now, the trade worked extremely well. We sold on the technical bounce. The trade worked out. So that's the levels to keep your eye on. Even if it trades down to that 145 level, again, there's only 11 trading days left, and the closer we get to it, even if it's at 145.01, those put spreads are going to be completely worthless. And it's a trade that we don't mind rolling forward because we think that gold has a bid longer term for the rest of the year. And some very high-profile people are very long gold. And it's apparently not as crowded as it sounds like it is with all the commercials on television, because people are so skeptical of the gold trade that it actually continues to work. It climbed the wall of worry, as we say on Wall Street. Okay, so the other trade is your SPY. On every dip today, there were points at which the selling just accelerated to the downside. We sold the SPY 128, 126 put spreads. This time, at the best levels of the day, we got 38 cents. Not too shabby considering we try to get a buck on a $5 wide spread. We got 38 cents on a $2 wide spread, which equates to about 95 cents if it was a $5 spread. The premium was there. We don't see that, so there's a key support in the S&P 500 at 1284. I think 1294 is the Japan low, so 1284, 1294, somewhere in that 10-point range is going to be what we think is your market bottom, especially over the short term. I know Steve Grasso talked about his line in the sand is that 1254, which is flat on the year for the S&P. We think that the situation, the economy, the markets would all have to deteriorate pretty significantly to break us through that 1284 level, which is why we sold the 128, 126 put spreads. Again, it's a position that we don't mind moving forward, because if we break that level and go through, we think it's just a matter of how long we stay there, not do we continue to further downside. To get further down, the situation would have to be as bad as it was when that happened. And I don't know if you've noticed, but S&P earnings, they're coming in better than expected. I think 70% of companies beat on that bottom line EPS number, and you can't continue to have better earnings per share over time unless, of course, the market just gives a lower multiple to those earnings. Certainly, if the multiple comes in, you could see the S&P trade at a lower valuation, but again, 1377 is our year-end target. We've got a lot of people that have 1,400 or higher targets, so we feel pretty good about our lowball estimate. And so far, S&P 500 EPS is on track to come in right now, I think, above $95 a share. We're using 95 as our level to get where we want to go on the S&P 500 index. So that's your level. 1284 is that short-term level. We think it holds. So we're going to sell that 128, 126 put spread whenever the panic just seems like it's gotten too far, too fast. There's a ton of selling. People are just getting emotional. They're hitting the exit button, especially on Twitter. Seems to be a lot of worried people on Twitter about the stock market. And someone made the joke that they obviously didn't trade through 2008 if they think this market is in free fall. Yeah, that's for sure. If you've never seen a market decline 700 points in one day, then you're a noob, which is why you should be listening to us on Lunch of the Market, because we're trying to be educational. All right, hope those levels help you trade. Remember, in a worst-case scenario, none of these trades work, but that's what a worst-case scenario is. And some very smart people didn't see it coming in 2008. And if it happens again, some very smart people will miss it in 2011. So keep your shirts on. Don't panic. Hope you did some buying. If you didn't, be selective. Go in there. Put a few positions on today. You don't want to put on your whole position, because then you would be telling us that you know the absolute bottom of the stock you're watching. And you don't, because no one does. We don't know the bottom until we see it. And by then, it's too late. So kind of layer into your trades, pick a level that you're comfortable with, start either selling your spreads or buying your spreads, or buying your stock or selling your stock in levels, because inevitably the trade's going to keep going and you're going to be out, and you're going to wish you hadn't been out, you're going to be upset with yourself. There's enough to worry about without second guessing yourself. So get in and get out in stages. Try not to move all the way in and all the way out, unless you just have nerves of steel and you don't mind missing a little bit either way. All right, thanks for joining us again on Lunch at the Market. Hope it's helpful to you. Don't forget, leave comments if you have questions. We always answer all comments. If you mention us on Twitter, we always get back to you, unless your comment is just way out of left field, like the conversation we had with some other guy who was trying to tell us that in French he's like twice as good as he is in English, and I don't know, it was very confusing. I wasn't sure what was going on. But if we poke fun at you, then it's just a joke. It's nothing personal. We love you. Thanks for tuning in. We'll see you tomorrow on Lunch of the Market.